Hi, this is Paul from paulbrockley.com, and this is a look at Costco for the 2021. Just looking at the times I've traded this. Well, I've actually added positions on this one for 2021, and really something that you could look to do as a strategy for the beginning of 2022 if you're looking for stocks for pullbacks. So I've got a couple of things on the chart here. I've got where you see these little 6 stars. This is my ex-Brad algo. This is the ThinkorSwim version. It's available for lots of other platforms. The green ribbon you see here that turns to red and goes back to green, that's the manager, and I'll talk about that when we go through. The little cloud you see here, that's the 55 EMA cloud, and I'll talk about that in a minute. And then I've got a couple of sort of important support and resistance zones. And then the candles you see are multicolored, and we'll talk about that as we go through with dots up above and below. That's part of the manager to keep us in these trades. So we had a dip at the beginning of 2021 with Costco. That happens. There's always profit taking. Catalyst could be earnings or something else, but usually there's a catalyst that causes a bit of profit taking pullback. So what we're looking for are opportunities to get back in, or to add to positions, or just trade it after those pullbacks. Now, not saying all of those stocks pull back at the beginning of each year and go. It's all at different times, but I just wanted to show you Costco because I've been in Costco a long time. And then I look for these add-on positions. So if you're just going to swing trade it, for example, this swing trade would have been on since March and it's still on now. This is opportunities of sort of growth stocks, really good trending stocks after pullbacks. So again, signal for me comes on the ex-Brad algo. The ex-Brad algo is basically my trading brain, and over the years when I've been swing trading, I tried to grade the trades, if you were. So for a 6-star buy, that's the highest grade that you can get. It's like a 6-star hotel. 12 points of control have to be met for the 6-star buy to give us that signal. So it's not just about signal, it's about entry strategies as well. When we look left, we see this pivot point here. So for those with a conservative nature, sensibly you would probably look for an entry around about $381, just above this support and resistance zone. So that's a conservative entry. I use this 55 EMA cloud really for what I call aggressive entries into these, and we can see that the 6-star buy is actually above the 55 EMA high here. So that aggressive entry is $353, so it's quite a bit earlier. And then when we've got that entry, we're going to use the manager to manage the trades because it tells us a story. And again, the manager's devised around my trading brain, if you like. So it looks at volume of each candle compared to the previous candle. It looks at average volume and it works that out automatically. But it also looks at the bias for the current time frame as well, with the ribbon as well. So it can give you what we call aggressive or conservative entries. And again, because we're swing trading, this is on the daily time frame. When I just have a look in here, you can see on the manager I'm on the swing trading mode. There's day trading conservative, aggressive, and day trading moderate, and swing trading. So I'm on swing trading right now. And then we can see we get that aggressive entry for me because Costco is a really great growth stock, and I don't tend to wait. If I get that 6-star buy, which I only, in this case this year, only got 2. The first one is at this point here. You're in. And then let's just zoom in now and talk about what the manager's telling us through this trade, through the year. So I'm going to point out a few things. The dots below, the blue dots below, are lower than average volume. Okay, so it still moves up. It's lower than average volume. The dots up above in cyan are higher than average volume. Okay, and then we've got these colored candles. So what do they mean? So a green candle is an up candle, but it has more volume than the previous candle, the previous day. So that's what's called an accumulation day. So there's more buyers, there's more shares accumulated during that day. A grey candle is an up day, but it has less volume than the previous day. So the momentum still there, but there's less volume traded than the previous day. And then conversely, when we go for shorts, cyan is a down day but with less volume than the previous day, and then a red is a distribution day. We can see this distribution candle where the cursor is now if we zoom in here. That's actually a bearish engulfing here on that previous day. It has more volume, closes near the low, but look, there's no dot above or below. That means that was an average volume day. So don't panic, if you like. What we're really looking for is not really panicking, but if a stock is going to go away from us on the daily time frame when we're swing trading, you usually get 2 consecutive down days, red days, so increasing volume each day with higher than average volume. Majority of the time, if it's trending, we only get one, like we call it a one candle wonder, and sometimes we even just get a pullback with lower than average volume. So it tells you the story. So anybody can get a signal. It doesn't matter whether you got the expert signal in a trending stock and you're in a really good run, or you've used another type of signal strategy. For me, I use the expert and I use Elliott Wave. A lot of people that know me, these are the main 2 strategies that I use. The main thing is to manage the trade to maximize the profits. So when we pull back here, this is average volume. Then we get a down day, but with an indecision doji with less volume. Then the next day we get a red candle with higher than average volume. Now, if the next day closes after that the same with a red candle with higher than average volume, I would look to close out the trade below the low of that particular day, but it didn't. The following day we got an up day, then we pulled back down again, and then an up day. Then we had again, we're talking about the story being told here. We had an up day with higher than average volume, followed by a down day with higher than average volume. One candle wonder coming down, pulled back up again. Another one candle wonder coming down, pulled back up again. All the time, excuse me, all the time we can see that the ribbon for the manager is getting wider apart, this green ribbon, and it's saying the bias is still bullish. Nice moves up here again. We're getting these one candle wonders. We're not getting consecutive higher than average volume down days here with Costco until we come all the way back up here. So we're coming into September now. Remember, we entered this at way down here on aggressive, around about 353. So at this point we're at around 470. So this is critical point here now. We see we've attempted this first lower than average volume red day, we lower than average volume cyan day, so that's still a down day, higher than average volume down day. Then we're going sideways. We get a red candle with higher than average volume, but the higher than average volume next down day is cyan, so that actually the volume is less than the previous day. It's going to run out of juice. We're not really interested in actually getting rid of that. We pull back up, we test that same level again. That's given us a big resistance zone right now. That's a down day, that cyan candle, higher than average volume, but it's not red, so it's not more volume. There's no greater volume than that previous green candle. The following day we get a red candle, higher than average volume, but then that one candle wonder runs out. You can see how then we get down days, we get 2 consecutive red candles, but it's average volume. It runs out of juice. And a lot of the times when we get these pullbacks, you see the 55 EMA cloud here in grey, it holds. It's a non-linear support and resistance zone. We come down again, we get 2 red candles here with lower than average volume. This is running out of juice, it's going to go back up again. Then we get another 6-star buy on the expert algo. So our entry, or we're adding more shares to this trade now, is above this resistance line, around about 470. We get some more, we're in again, and we're still in right now. Again, we look at this, we get a red day, higher than average volume, and again it's all worked out automatically. It looks at the look back periods, it's all worked out in an algorithm. We get another down day, higher than average volume, but it's a cyan day, so it's actually lower volume than the red day. Then we get a gap down rejection, higher than average volume, green day, we pull back up again. We get two candles now, red candles with higher than average volume. So for me, this pivot point here is the trailing stop. The first time I'm going to adjust it really aggressively for the year at 513.32, because I got two consecutive red days, so increase in volume on that day to form the bearish engulfing and higher than average volume. And more volume on this day than the previous day, higher than average volume. So that's where my stop would be the following day. And guess what happened the next day? It gapped up, ran up higher than average volume to test those highs again. Now we had a grey day, and then yesterday we had a red candle with higher than average volume. Today we've got to see what the story tells us. We're not going to panic. Remember, we've had two entries in this during 2021. There's been no reason to get out of this trade. No reason at all. Two 6-star expert algo signals. The first gets us in on this next bullish run after quite a sizable pullback, and then we've used the manager to stay in. Now, the conservative way to use the manager is look at this green here, and as long as that stays green, you stay in the trade. So again, if you get more than two consecutive red candles with higher than average volume, you can be more aggressive and get out the following day if it breaks this recent pivot that we've just discussed, or you can wait and see how long this holds for it to come back. So again, it's a very simple strategy. You don't know if a stock's going to trend for the year, but there are momentum stocks that will trend, and invariably you've got to be in it to win it. So you've got to get in after those pullbacks, and an expert algo is a fantastic way. If you get a 5 or a 6-star buy here to go long, that's the sort of signals you should be taking. The EMA cloud set on 55 gives you the entry, and then you just use the manager to manage that trade. Don't panic when it pulls back. At this situation here, there was no reason, and again, watch this video again, I talk through every single candle here. There is no reason to panic and sell your position right there, because the average volume, the volume candles, the EMA cloud, everything is holding. It's just normal profit taking. It's not high volume. There's no real momentum, and then it turns back around and you get another opportunity to add to your trade right there. So again, hopefully this helps. It's very, very important when we're swing trading stocks not to say, I'm only going to hold this for 10 days, I'm only going to hold this for 1 month. If the stock is trending and you've got in after a decent pullback with an expert algo, use the manager. Use the manager to manage your trades sensibly to maximize those profits. Hopefully that helps. Speak to you all really soon.